Hi, folks. Dan Bird here for Tuesday, January 7th. Today is Technical Tuesday. We're going to be talking about the impulse system and the force indicator today. So I want to get to it quickly because I don't have too much time. I've got to go somewhere tonight again, but at least the market's closed this time. So we'll take a look at what happened today. First off, I'm not a financial advisor, as you hopefully know by now. So you need to understand your own trading style. I do not make recommendations. This is for educational purposes only. You need to do your own due diligence. And if you want to engage with a financial advisor, you can check them out here at this site. And past performance, of course, does not guarantee future results. So let's take a look at what happened today in the market. First off, I don't know if you can barely see it right here, but the market bias actually dropped quite a bit today. It's actually going straight down, in fact. So let's look at that first. You'll see down here, again, the short term actually went straight down, so it's almost imperceptible, but it is definitely dropping. But you can see all the red over here. So these are the ones that changed today, anything that's highlighted. There's only one green, which is gold, actually had a short-term up signal, but everything else is red today. And a lot of them flipped from green yesterday back to red. So that's not a good sign. So let's look at a couple of these. Here's the S&P, first of all. You can see the channel lines that I drew quite a while ago, actually. I drew it way back here before it actually had this big drop. And it's really respecting that line. This right here, this black candle right there is a shooting star. That is a reversal or a failed breakout. And I mentioned this came in yesterday, actually. And I mentioned yesterday there were a lot of these. I noticed on quite a few charts. I actually am noticing more today as well. But actually more today is these big, long red candles. So just selling off right from the beginning all the way to the end. And I'm not exactly sure why. The ISM number came out at 10 o'clock this morning and implied that maybe inflation is coming back. It actually was healthy, so it went up. So that means the economy's strong. But I think the market's interpreting it that inflation might be going up, and we're going to know more about that soon. But I'm not so sure that that's the reason. It may be more technical than anything else. It basically hit this trend line almost exactly and then reversed off of that and closed today below all of its moving averages. So it may be headed back down here to this trend line right here. Now, interestingly enough, if it gets there, and this is something that I haven't drawn on the chart, but I probably should. 5850 is the key level. 5850 is right there. So you can see it's where this resistance was, it's where these support levels were. If we don't hold that, if we drop through 5850, right about there, which is actually above this trend line. So if it does go down to the trend line, that means it will be below 5850. And if it closes there, and especially if it breaks through that trend line, then we're likely headed much lower. First stop would probably be here, about 5721. Next stop would be down here, 5650. So keep an eye on those. Next, let's take a look at the NASDAQ. It should look fairly similar. So sitting right above its 50-day moving average. We'll look at the IWM, which is the Russell. Same thing, the Russell has really not made any headway it usually rallies right this time of year, all the way into April, but it sure doesn't look like that's going to happen this year. So we may be setting up for an early bear market, even before the end of January. So keep an eye on all this. If these things really break down, then we could be heading much lower. XLK, this one actually gave a bullish signal yesterday and today gave a bearish signal. And there is that shooting star reversal candle right there. And this is a perfect example to show you what happens after a reversal candle like that, the shooting star. We don't really see it anywhere back here. So this is kind of the first. There's one right here, the shooting star, and you can see it drop right there. but a huge down day today. So that's confirmation that that reversal candle is accurate. And then let's look at Bitcoin, of course. I'm sure everyone's interested in Bitcoin. Bitcoin now has a bearish engulfing candle. It already has negated the head and shoulders pattern, but it looks like it's back in it. And actually, right now, we're just looking at a support level. So it's not really a head and shoulders anymore. The one yesterday broke that, but it's an engulfing, bearish engulfing candle, huge one. It ended up below all of its moving averages. So next stop for Bitcoin is down here at 91.9, say, let's call it 92. If it doesn't hold 92, then it could easily go down here to 72,000. So keep an eye on that. It's below 100 again, 96.7. That's where it is right now. So we'll have to watch Bitcoin, see what happens. All right. One other thing I want to look at, and I actually haven't looked at this today, but on the charts page, on the left-hand side, near the bottom, we have the VIX. And let's see where the VIX is. The VIX now is 1788. So it is now above 17. So it's in this neutral zone right now. If it goes above 20, then that's bearish. You can see it when it goes above 20, it doesn't stay there very long. But if it gets back above 20, and if it keeps dropping, that could happen as early as tomorrow, then it definitely is a bearish sentiment on the market. You can see the 12-month rate of change is this green line right here. Definitely bearish, definitely heading lower. So not a good sign for the VIX, but again, it's not yet there. It's not yet something that's concerning, but certainly things are heading that way. We'll look at the trend analysis that I showed you yesterday. Again, there's what it looks like. These colored bars up here is what I'm going to cover today. That is the impulse system. So this is a really good example of it. So keep that in mind. I'm going to explain what this all means and how to use it. But right now it has blue bars. It has not broken below the 21. This is a weekly chart, so it has not yet broken below the 21-week moving average. Blue means it's neutral. Green would be bullish. Red would be bearish. And blue means neutral. So it's neutral coming off of a bullish signal. So we'll see. And it's still above this channel line. So all of these things are coming into play, all three of these things. The 21, this support level right here, which is basically at 5,700, let's call it. And the channel line right here, which is about at 58, that's about 5,800 right now. So, and the 21 is at 5830. So again, if we break through 5850, then probably all of these things are going to get taken out. And we'll probably head down here to the 50 at 5,500. So we'll keep an eye on it. And like I mentioned before, the long term and the medium term both have bearish divergences. So we'll have to keep an eye on that. Last thing before I get into Technical Tuesday is we'll catch up on the January barometer. Santa Rally ended up minus 0.5%. Right now, we're looking at the second piece of this, the first 5 days of the new year. So that started right here. We've got one more day left. So tomorrow, if it stays above this line, then it will actually be positive, this number 2, the second one. If it drops below the line, which is at 5880, if it drops below that line, then we will have 2 negative readings for the January barometer. Now, we had 2 last year as well, but last year we had minus 1%, and then we basically were flat. So the trend last year was higher, even though they were negative, it was higher. So we really want this to be positive. So we want it to stay above 5880. We'll see if that can happen tomorrow, but we'll revisit that tomorrow. Take a look at it. All right, so let's talk about Technical Tuesday. And the topic for today is the Elder Impulse System. So I'm going to explain what this is, and then we're going to see some examples of it. You've seen them before because I use this in my charts quite a bit. So the impulse system was created by Alexander Elder, And you can read it in his book, Come Into My Trading Room. It identifies inflection points where a trend speeds up or slows down. It's based on two indicators, 13-day exponential moving average. So that identifies price or trend. And then the MACD, which identifies momentum. So it combines the two of those into one bar. So it combines trend following and momentum to identify tradable impulses. And that's the cool thing about it, is that you can see both trend and momentum in just one bar. So here's the way it's calculated. It's pretty simple, really. The trend component of it is the moving averages. So it looks, if the moving average is higher from one day to the next, or from one period to the next, depending on what time frame you're looking at, but let's call it a daily time frame. If it's higher from one day to the next, then the trend is higher. And the MACD identifies momentum. So if the histogram is higher than it was yesterday, then momentum is also up. And that gives it a green bar. Now, if these things are reversed, so if trend is down or the 13 moving average is lower, and the MACD, which identifies momentum, is also lower, if they're both lower, it gets a red bar. If one of these two things is different, it gets a blue bar, which means neutral, basically. So it's essentially when one of these two conditions are not, or if either of these conditions are not met, then it is a neutral bar. So that's the way it works. So here's an example of it. Let me see if I can make this a little bit bigger. Here's an example. So the moving average right here is the 13-day exponential moving average. You can see in this yellow area here, the moving average line is down and the MACD is down. So you get a red bar. In this section over here, this yellow one over here, the moving average line is higher and the MACD histogram is higher. So you get a green bar. In this period, one of them is higher, the MACD is higher, but the moving average is lower. So you get a blue bar. Now these blue bars represent neutral, but it's coming off of red bars. So it's neutral to the upside. And I use this on my website. I'll point that out to you. And now you probably will hopefully understand what it means. But the blue one is a neutral. So it can be neutral to the upside, or it can be neutral if it's coming off of a green one, like right here. It's a neutral to the downside because it's coming off green. That doesn't mean it's going down. It just means it was green, but now it's neutral. You can see here it turned back to green again. So keep that in mind. Time frames, they can be used across different time frames, but you want to make sure that they are in harmony with the bigger trend. So it explains that a little bit here. So if you're using daily, it says first identify the trading time frame that you like and call it intermediate, whatever that might be. If it's weekly, then for you that's intermediate. If it's daily, then for you that's intermediate. So take the intermediate time frame, and then you can move to weekly charts for a long-term trend. If you're looking at weekly charts, then you want to move to a monthly for a long-term trend. And that's basically the way you would do it. Now, the nice thing about this, and the cool thing that I like about it, is that he actually says right here, just multiply by 5. So take the time frame for your intermediate, multiply by 5, and you get the long-term time frame. So if you're using daily, that's 13 times 5 is 65. Then the long-term is weekly. So 65 would represent a weekly chart. And that's a way that you can represent both daily and weekly on the same chart. So I'll show you an example. So down here, it explains right here, 65-day is 5 times the 13-day, and that represents weekly, basically. So in this case, now we have a 65-day moving average, and now the bars, we have, now the bars are actually on daily, they're on a daily basis, but these are daily bars. So it's showing you bullish, bearish, basically the same thing we looked at above. And then when it changes from bearish to bullish, then it turns blue. But you just put a 65-day moving average underneath it, and you can see what the weekly looks like. So you can see if it's violating the weekly time frame just by looking at a single chart. So it combines everything into one single chart, both trend, momentum, and daily and weekly all at the same time in one chart, which I think is kind of brilliant, frankly. So entries and exits, you can identify when they change from blue to green. So that might be an entry. So there's one right there. Or when they change from blue to red, it's going the other direction. So there's an exit, especially when it goes below the weekly time frame right there, which is the 65-day moving average. So you can very quickly see, just by looking at the colors, you can see when those things are changing. Takeaway: impulse encourages you to enter cautiously but exit fast. It's a professional approach to trading, the total opposite of the amateur style. Beginners jump into trades without thinking too much and take forever to get out, hoping and waiting for the market to turn their way. So this actually can help you enter cautiously but exit fast. So using it with sharp charts, I'm going to show you that on mine. So all of that explains this whole thing. And now I'm going to get into some of the charts. And actually, to do this, I think what I'm going to do is, first thing I'm going to do is go to the website and look at a couple of charts that I put on here every day. These are updated every day. Now, I have not updated these yet because it's so close to the close. But if you look at the sector bias matrix right here, you may have noticed these little green, red, and colored blocks over here on the left side. What those are essentially is when the impulse bar changes. So, or the color of the impulse bar. That's the way to think of it. The color of the impulse. So for XLK up here, it is green. For XLP, for staples, the impulse bar is red. For XLY, it's blue, but it's blue coming off of a green. So that means it's a down, it's a short-term down. For XLU right here, it's red, but it's red coming off of a, actually the XLY is a blue coming off of a red because it's green. So this is coming from a downtrend to a neutral trend. And this one is coming from an uptrend to a neutral trend. So that's what the different colors here mean. So anything with a little white thing in the middle is a blue bar, and you can tell which direction it's coming by the color. So this one's coming from an uptrend. It's a new downtrend, and this is a new uptrend. So that's kind of what those mean. Now that you've seen the impulse system, that should make more sense. So here's the Magnificent Seven over here. So you can see Google, Amazon. Again, these are from yesterday, so because I haven't updated it yet. You can see Apple has a red bar on the impulse, and actually yesterday just gave a short-term down signal. Microsoft has a blue, and Tesla has a blue coming off of a down signal. So they might be ready to turn around. Netflix has a red bar right now, and it has a short-term down signal. So now you hopefully can interpret what these squares mean just by looking at the colors right here. These basically are the impulse system represented in a matrix like that. All right, so let's next get into some stocks. Let me make sure I've covered everything I want to. Yeah, the impulse system. Yeah, let's get into some stocks that people have asked about. One way I'm going to do this is I've set up my ACP. So this is Advanced Charting Platform from Stock Charts. So those of you who have Stock Charts subscriptions can also set this up. I have not put this on the website yet. And by the way, for those that are new, if you subscribe to the website, on the chart lists and scans page, I have all of my favorite chart styles over here. I have a bunch of scans that I created right there. This is the ACP formats. I have not put that 4-panel one out here yet, but I will. So you can just basically click on any of these if you want to duplicate the things that I'm showing you or modify them for the way that you would like to see it. So right here, you see a 65-minute chart. So that's basically representing the longer time frame. So all of those are on here. The other thing on here is relative outperformers, which I update every week. Should be actually as of 1/3. So there's 255 symbols. These are stocks that are outperforming their own industry group by 10% or more. and outperforming the S&P by 7% or more. So they have to satisfy both of those conditions. So this is a really good list of stocks, and it's one that I use for my scans as well. It's incorporated into the top 10 list, which is on the charts page at the bottom. I update the top 10 every week, and interesting this week, a lot of them were in all three lists. So you can see Palantir, Reddit, and Affirm, and SoFi were in all three lists this week, and WGS. So very strong for those stocks. That's very rare for that to happen. I mean, it's rare even to get one that's in all three, but to get five in all three, that's pretty amazing, actually. And then I've got the large cap, mid cap, and small caps down here. These are the top 10 as well, and all of those are combined, as well as the relative outperformers are all combined down here in this list. And this you can download. It's a CSV file, so you can use this to search, create your own scans, and identify things that good candidates to trade. Okay, let's take a look at some stocks now. So I'm going to use my my ACP to do this. And as you can see, I've got it set up for NVIDIA right away. So the way I've designed this is I have a daily on the upper left. The daily has a MACD on the top, and it has the squeeze, John Carter squeeze, on the bottom with volume on here too. And this has a 5-day, 10-day, 5-day, 21-day, and a 50-day moving average. And then the 200 is the dashed gray line below it. To the right is also a daily chart. So you can see right there, it's also daily. Let me close that. But in this case, now I have the Keltner channel. So it tells you when it is getting to an extreme level. This basically is the green area is the range that it typically travels in 1 day. Because it's a daily chart. That's a 1-day range. If it gets to the blue on the outside, then it's reaching the 2 times the 1-day range. When it gets to the red, it's reaching the 3 times its normal range. It's very rare that it gets all the way there, and it's even more rare that it gets above that or into the 4x range. So usually that's when it will reverse and start to move lower. Now you can see in this case, it made it up into the 3x area, didn't quite get to the 4. And also notice the shooting star reversal candle from yesterday. So it gave back 2 days worth of gains. So that is and also ended at the low. So the only reason that NVIDIA stopped going down is because the market closed today. So it could continue. It hasn't crossed the green lines down here. This is an ADX, which I covered in a previous Technical Tuesday. So you can go back, as well as Keltner channels. So you can go back and look at those if you want to learn more about it. Down here is the weekly. So I've got the daily on the top and the weekly on the bottom. Now down here, you can see the impulse bars instead of the candles down here. So right here, you can see it's respecting its 21-day moving average, which is what it has done all through this whole uptrend. So it's still in a good weekly uptrend, but momentum is starting to decline, still not below zero, but starting to decline. And you can see over here, it just barely made it to the 2x level. I actually can expand that, and you can see it right here. So this is the weekly chart. So it just barely made it to the 2x level, and it changed to blue. So it's now neutral. So it went from a green to a blue. The ADX down here, the green is still above 25, so it's still bullish. It turned bullish right back here, right in this area, which was September 16th. And if we look at September 16th on the daily chart, it's right here. So you can see right in this area right here. So the weekly kind of gave you the signal of when to get in, which would have been right here at about 115, and it went up to about 150. Now, interestingly, it basically, in addition to the reversal candle, it also hit significant resistance right at that same 150 level. So it should have been expected that it would reverse right there. Don't know how long it's going to continue down though, so we'll have to take a look at that. Just out of curiosity, let's look at SMH, which is the semiconductors. So it looks almost exactly like NVIDIA. There's the reversal candle, shooting star, It's a very reliable trend reversal candle, and right when it hits resistance right there. So it blew right through that one. And then semiconductors down here on the weekly chart is still green. So it's still above the moving averages. So that's still positive. And momentum actually looks like it might be starting to curve up, and it does have a squeeze right now. So it's not giving up yet. It may still have some life in it. We'll see. So let's get to some of the other stocks real quick. So first, I'm going to look at actually Zeta. You know what? To do this, I'm going to do this a little bit different, because if you remember, Zeta was on our daily scan list, and I'm still working on creating a scan that is based on weeklies instead of dailies. But this is the daily scan list. We only have 2 stocks in it right now. But you can see Zeta down here was identified. It met the conditions of the scan back on October 30th. So, and the reason we didn't get in was because it was close to earnings. It's only 12 days away from earnings. But it would have been a good entry anyway, because typically strong stocks will run up into earnings. So if we look at Zeta, we can see right here, this vertical dash line is when it identified on the scan, when it went above the 21-day moving average. So that's when we could have got in and would have run up to there. And then we set our stop right there. So we would have been out at 32.50. So we were in at about 28, I think it was, and would have been stopped out there, but would have saved all of that pain and suffering through this period. Now, what does it look like now? Well, it's trying to make a comeback, but it's below the 0 line for momentum. So that's confirming a downtrend. By the way, one thing that I didn't cover is, and I meant to, was this little chart behind the price up here is called a force indicator. It's also by Alexander Elber, and it basically takes that 13-day moving average, the same thing that creates the bars, and it puts it into an oscillator. So it basically is the same idea, but puts it into an oscillator. So anything below the 0 line is a downtrend. Anything above the 0 line is an uptrend. Same with the MACD up there. So that's kind of how that works, using the same bars idea. Right now, it is continually going down. The accumulation distribution is still going down. The money flow, which is this gray one, behind it is the short-term money flow. And then the darker one, the darker green one here, is the long-term money flow. You can see long-term money flow is still negative. In fact, it went negative right back here after this. This was earnings right here. So right after earnings, you can see earnings is on the 11th. So right after earnings is when money flow went negative. Tried to make a comeback right here, but couldn't get above the 50. So I suspect that and it looks like money flow is starting to come back in again. So it may try to make a run again, but it's got to get through the 21, the 200, and the 50 before it can move higher. And I suspect it's probably going to run into resistance right here at 22.50, and probably again right up here at about 25 if it makes it through this, if it does. But I think it's going to hit a lot of resistance there and probably get rejected, especially if the rest of the market continues to go lower, like I'm kind of expecting it's going to. All right, so that's Zeta, and it shows you, just by the way, we can look at the other ones. Affirm was another one that hit the scan right there, had a really nice run. Now it's going sideways. Looks like it's actually rolling over like everything else. I mean, this is not surprising. Everything's kind of looking like this right now. So Affirm would have been a good one, but again, it was just before earnings. So I don't like that, a binary event. It was only 8 days before. Excel was another one we identified. So right there, it hit the scan, but I didn't like the momentum below 0. There's a lot of things about this that I didn't really like, as I've explained before with the daily scan. And we'll get back to the daily scan when I complete the weekly scan. But if the market goes down, we probably won't be adding anything to the scan. So we didn't get into this one, and you can see it's traded lower ever since. Here's Upstart, which actually did really well right at first, did fantastic actually. So it hit the scan right there, and I announced it to everybody. I did not get in it, but that doesn't mean that other people couldn't. This was only 2 days before earnings, I believe. Yeah, 2 days before earnings. So that's the reason. I don't like binary events like that. I actually like to get in um, at least a couple of weeks before earnings and have it run up. But that's what that one looks like. So it had a really nice run, pull back. It's sitting right here, basically at the support line. So it will need to turn around as well if the rest of the market does. It's giving a medium-term down signal and everything is below zero. So it's confirming the downtrend. And you can see the force indicator right back here, also confirming the downtrend right there. And finally, builder, which actually we didn't get into either because I didn't like, it was below the 50-day moving average. Could have been an opportunity to get in there, but it still wasn't above zero. So we didn't, and now it's just sold off. Significant sell-off. You can see the force indicator again in the background. So that's kind of uses the same idea as the elder impulse system. All right, so let's go take a look at something else. First, I'll close all these out. Now, let's look at NXT, another one from a subscriber. So NXT actually looks really good. NXT is in the renewable energy space. It has a nice cup. So it's hitting resistance right there, almost exactly today. Hit resistance. I wouldn't be surprised to see it pull back. It's also right at the 200-day moving average, a little bit above it right now. So I wouldn't be surprised to see it pull back from here. So there's resistance almost to the tick, almost exactly. So I wouldn't be surprised. You can see a little cup right here. I wouldn't be surprised to see it pull back and then come back up. And if it breaks through that resistance line, then there'll be lots of orders right above it for people ready to buy if it breaks through. This is a good example of technical analysis. So all the people that bought over here right after earnings, it went up. So they might have bought actually on this day at the high, and then it sold off. And all of these people over here are saying, please just get back to break even so I can get out. And that's exactly where it is today, right at break even. So that's what makes the handle in a cup. All these people that are gone through the pain ever since November of last year, gone through the pain of it selling off, just want to break even to get out. And that's what creates the handle of the cup. So if that happens, then what you do is you wait for it to break out above that. And there's lots of buy orders sitting right up here, ready to get in. So this one actually doesn't look too bad. It's one to keep an eye on. All right, next one on the list is Chewy. Chewy, daily on the top. Chewy actually looks pretty good too. It's actually same kind of thing. Formed a cup, might be probably forming a handle right now. It hit into the 3X area on the daily. The green is above, so it is in a bullish configuration right now. It had a little bit of a squeeze right back here through this period, and then it had a weekly squeeze right back here. So as I move my cursor on the weekly down here, you can watch the cursor move up here as well. So you can see the squeeze, the red dots, 2, 3, 4, 5, 6 red dots in the squeeze. Squeeze basically just means it's going sideways and it's building up energy, and it likely will break out with a lot of power when that happens, when there's a squeeze like that. So right there, you can see up above, that was the day that it broke out on that big bar, that big candle right there. Did pull back and then continued to go higher. So this one looks like it looks pretty good right now. On the weekly chart, it's very close. In fact, it is extremely close. So here's resistance right there at 39, which is also significant resistance way back here. This is all the way back in 23. So all of these people have been waiting a long time, and they probably, a lot of them sold out right here on this green bar, which it was actually a few days after earnings. So this is a good example of what I mean by these people just wanting to break even. So they all sold right there. That was resistance. Well, it's back to resistance again. So now I think these people are probably sold out through here, but the ones that bought in here want to break even too, and the 200-day is right above it. So wouldn't be surprised to see this one pull back a little bit, but notice the impulse bar. So now you understand what these mean. After what I showed you today, the green is both trend and momentum is higher. The blue is neutral. The red is both trend and momentum lower. So when it changes from blue to red, you have to be careful. When it changes from red to blue, that's the time to get in. So anyone that likes getting in on a big pullback, that would be the thing to watch. Watch the red when it changes to blue. That's when it's getting ready to take off again. Doesn't mean it will. I mean, what I like to see is for a green bar above the 21. That's what I like to see it. But in this case, it's been below the 50 for a very long time. It wasn't until right in this area right here, when the momentum went above zero, right up here, that it actually was beginning a new uptrend. So right now, it's probably going to pull back a little bit, but it actually looks pretty good in general, as long as the rest of the market cooperates, actually. So I'll always have to qualify it with that. Riot follows Bitcoin. Bitcoin had a bad day today, but Riot actually didn't have that bad of a day today. So on the weekly down here, you can see it's right below the 200 week, but it's above all of its moving averages on the daily. And it had a squeeze on the daily chart back here. The best opportunities are when you have a squeeze on the daily and on the weekly at the same time. So that very rarely ever happens. But at least there was one here on the daily, but the squeeze by itself doesn't mean it's going up. That just means it's building up energy. That energy could also resolve to the downside. This just tells you that it's building up the energy. So you have to use other things to figure out which direction it's going to go. Right now, it's going sideways. It wasn't a squeeze. It no longer is, but that squeeze may reappear again, but it needs to get here above 15 probably before it's really going to start to take off again. So right now it's in a sideways pattern, but it is in its 1x level back here. So it's not overextended. So it certainly could go higher from here. We'll see. Last one is LTRX. This is one that somebody asked me about, and he asked me today, can you tell me where major resistance is? And my reply to him was, this is a pop quiz. Where do you think major resistance is? So if he's watching this video, now you're going to know, but this is on a daily chart and it's really clear. This dashed line right here is today's close. You can't get any more clear than that of where major resistance is. Right there, 450. Now, there probably will be some pullback as a result of that, but this is a telecom equipment company, but they've got into the federal space and the defense space. So it's starting to take off. And if we actually look at the weekly chart, you can see here, again, the dashed line, you can see where resistance is. It's at major resistance right now. And it's got the 200 week above it that it still has to get through. But the next level, next major resistance above that is at 650. So it could, if it can get through this, and I wouldn't be surprised to see it pull back a little bit before it makes that run. But if it does make it above 450, especially with higher volume, then 650 is probably the next target for it. So that would be a pretty nice run. I think this person got in way down here at like 250. So 250 to 650 would be a nice run for this one. For anybody else interested, this might be an opportunity as well. So that's it for today. Those are all the stocks that everyone wanted to take a look at. Be careful out there. We look at IWM just for fun. So this, by the way, one thing that I'm noticing on a lot of stocks that I'm tracking and also on the scans that I'm running, what I'm noticing is I'm getting good setups from my scans. In other words, there are candidates that it's generating, but the rallies are failing. So anytime I see that, whenever I try to do something that has worked in the past and all of a sudden they seem to be failing and they're not successful anymore, well, that's the time to stop trading. Just sell them, get out, or let your stops take them out, but don't add any new positions. Wait for the market to figure out what direction it's going to go. I think it might be deciding to go down right now. Next week we have the CPI number, and if that comes in hot, that's going to be a major downtrend for the market. And I think it's even giving us signals now that that might be the case. So just keep that in mind. I don't know what it's going to do. Nobody knows, but that seems to be the sense. I mean, it kind of feels tired. The Russell 2000, this is small and mid caps, which usually do really well and mid-December, and they haven't. And they usually start to rally mid-December all the way through April, and that has not been the case. So it's going to get a short-term down signal maybe tomorrow if it continues going down. Momentum is starting to roll over, but it's still above one. I'm still above zero, rather. So it's still in an uptrend, medium-term, intermediate uptrend, because this is a daily. This is a weekly chart. So it's in a long-term uptrend still. However, it should have started to rally before now. So here's the daily chart. So now, and this one it is below zero, trying to make a comeback right here. Can't get above its 21-day moving average, much less the 50. It had a decline today on higher volume. So none of these things look good for the whole market, basically. We look at the Qs for the NASDAQ. There's a daily chart. So it just looks just like NVIDIA, doesn't it? This here is a spinning top indecision, usually a reversal, but you don't know until it confirms, and now it has confirmed. So that's a reversal candle as well. This is on a daily. So all of these things I would say warrant caution, be very careful, and let me know if please like and subscribe. I'd really like to get to 1,000. If we could get to 1,000 subscribers, if you guys want me to continue to do this, but please like and let me know what you think and any questions you have, or if there's any other stocks that you want me to look at, I'd be happy to do that. Thanks, everyone. Have a nice evening, and I will talk to you tomorrow.